Hey guys, today we are looking at HP Inc. ticker symbol HPQ, and is it still a buy after this massive 10% increase on the day? Absolutely crazy. Has had earnings of the day, it's beat earnings, and the market has reflected pretty positively today with a 10% increase to around about $35.44. Briefly did break its all-time high. If we just go to the old chart here, you can see that it has had a crazy run up since the pandemic. So we'll just go to the last 5 years. Had a crazy run up, hit its all-time high, bit of a pullback, and then has shot up again to $35.44. So is this a buy right now? We are going to have a look at it. So first, HP has a market cap of just over $40 billion, share price of $35.44 with a 52-week low of $21.26, and its all-time high, $36.21. It pays a pretty nice 2.82% dividend, and the ex-dividend date is the 7th of December, so buy before then if you want to get paid. The payment day will be sometime in January. So first, is the PE ratio less than the market? And yes, it is. A very low PE ratio, 6.65 compared to 20. That is excellent, even lower than the historical averages of the market, which is probably around about 18. Is the revenue increasing? Yes, it is, but not massively. 58.4 billion to 62, so that is a pass. Is the profit increasing? No, it's not. 2017 was 5.3 billion, is now 4 billion. But if we look at the previous 2 years, it is increasing from them because they were both 3 billion each. So profit has decreased over the last 4 years, but has increased over the last 2 years. That is promising, but still a fail as per these steps. And they are buying back their shares at 1.6 million to 1.4. So that is another check mark. And the reason this is good for investors is because if you own 10 shares of a company and there's 100 shares, you own 10% of the company. And then if the company buys back 50 shares, there's now only 50, you own 20%. You own 10 shares, which is 20%. So they're rewarding investors with those buybacks. And it also means that they think their share price is a bit undervalued, which was definitely proven correct by the fact it's at its all-time highs again. And finally, is the free cash flow increasing? Yes, just shy of 4 billion to just shy of 5. So that is a check, and that is 4 passes out of the 5, and a free cash flow ratio of around 8.3, which is around about the PE ratio, which is very good to see. And they have a $1.1 billion in dividends, and with a $5 billion in free cash flow, they have no trouble paying it. So that is excellent news. So let's head on to the valuations, but first, can you give it a like? And if you don't, that's fair as well. So we've just counted we've calculated the future free cash flows. These are pretty conservative estimates, as you can see. They're not beating 2021's free cash flow till 2025, but this gives a calculated stock price of $96, which is 117% discount. This is due to that low free cash flow ratio and PE ratio. You know, other companies, Microsoft and Apple, obviously a bit different to HP. Their PE ratio is around the 30s, the high 20s and 30s. If we look at things like Dell, theirs are in the 20s. So with a very low free cash flow ratio, it's not completely out of the realms of possibility that this stock could get to $100, but it is quite high. So I just want to keep that in line. These stocks often do have a very low PE ratio and free cash flow ratio, which is why it's that. But that's why we have the Buffett-Graham intrinsic value to mesh these together. But one thing I can see right now, good earnings per share and a massive expected growth rate. Analysts are thinking this is going to grow 22% over the next 5 years, and that gives an even higher price of $208 a share and 64 cents, and then a Graham price, which is a buy and hold. If you ever see this price at 156. So both of the models are saying that this stock is at a massive discount. Now, this is just models. If we even take this as the lowest, could it get to $100? Very likely. These ones are a bit less likely, but it just shows that this company is in a good stead and definitely going on the right track. Analysts think they're growing. This is with the high bond yields as well. HP offers 6% bond, and even with that, this still gives massive price valuations. And these are both in line in one respect, is that they say the stock is undervalued. We're just going to quickly look at some technicals here. You can see I have a 50-day moving average in green, 100-day in yellow, and a 200-day in gold. And, well, what is happening? The price is above all 3 major moving averages, and the 50-day is crossing the 100, which is a golden cross bullish signal, and it looks like it's about to cross the 200-day. So in terms of moving averages, that is very bullish signals. And then if we go in the other ones, we have a MACD and RSI. And what does this show us? Well, the MACD, you can see the MACD line has crossed back over, and that is a bullish signal. Both of the MACD and signal line are above the 0 again, which is a massive bullish signal. And if we go back, when could you have made money on this stock? Well, here it was under, which was bearish. The signal lines crossed there. That would have been your buy signal, about $26 a share. And then here's your other buy signals as well when both lines crossed. So MACD has been pretty good at this stock. Although on the other side, on the daily RSI, you can see that it is in the overbought ranges quite dramatically. It hasn't been this high since March of 2021 on the run up to its all-time highs again. And what we saw that was a bit of a pullback. If we just go to the weeklies as well, which is quite good to see, you can see that the stock did revert back to the mean and is dropping back up as well. So technicals are pretty strong, but I would say overall the fundamentals of the stock is the more interesting thing. And just to reiterate there, discount free cash flow says about $100 a share, grain price 150, and a fair value of 200 on the Buffett Graham intrinsic value. Right guys, thanks for watching. Please give a like on the video if you enjoyed it, comment your thoughts down below, and I'll catch you guys next time.